Today, folks, we gotta discuss Meet Kevin, why I think he's absolutely moronic, and the video he recently posted is probably the most arrogant thing he's done in his entire YouTube career, in my humble opinion. And then I want to review stocks that I think are actually at discounted values across growth stocks, small caps, and even dividend stocks to offer some fruitful advice here, because if you guys did not see this, I highly recommend watching it. I'm going to leave the link in the description below because I thought it was great. It makes him look glorious, but at the same time, I got this sick feeling to my stomach, because basically when Meet Kevin decided to go short the market, become a non-diamond hander, flip-flop, and then now he thinks he's buying the absolute bottoms here and he's printing tendies all over again. Meanwhile, you know, his portfolio went from like 30 million to 20 million, and everybody that he was just hating on him, he's just making fun of in this video. And it looks like even some of his own friends like Graham Stephan, like Jeremy, like he really points out a lot of people here. And the thing that bothers me the absolute most about this, guys, is he's living in a bubble, like his own little circumstantial world where he's playing around with a few secular stocks and he's acting like that's the entire markets that he's geniusly flip-flopped and played and traded around in the last 3 months. Meanwhile, we haven't even seen his full strategy come into fruition. We still have no idea what the next several months is going to look like, and he's arguably buying into still crazy overvalued stocks. The thing that bothers me and why I think this is so arrogant is because he didn't let it play out. He's letting people get to him, and like I said, he did his thing. I thought it was great. I thought what he was doing incredible, but up to this point, guys, I just lost so much respect for him, because you read these comments, none of these people are probably trading multi-tens of million-dollar portfolios, and they're like, you're only crazy until you're right. Well done, Kevin. Good on you, Kevin. You should be proud for listening to your own voice instead of the crowd's voice. This is how I feel after buying oil and steel stocks in 2021 when they were dead. As my dad always used to say, forget the haters, point them to the scoreboard. Proud to see you hold on to the course and happy to be a course member. Like, he's really just shoveling shit down these people's throats, when meanwhile these people just understood full diversification like I basically preach. Like, I own a lot of Canadian stocks, US, and now some Chinese stocks, and my portfolio is back at all-time highs. Arguably, I bet you I have better percentage growth rates than Meet Kevin does. Maybe. I mean, he did really well betting it all on Tesla in the past, but my God, guys, this isn't like an end-all be-all to the entire markets for these people that I highly doubt have multi-million-dollar portfolios. So it's just honestly laughable to me when meanwhile Graham Stephan and his friends were just saying, hey, you're not preaching the right advice, like Warren Buffett, Ray Dalio, like long-term investing, foundational discounted companies. Meanwhile, Meet Kevin thinks he's caught in the bottom on Nvidia, Tesla. I'd arguably say some of the small caps he's buying are good deals here, but these stocks have really priced in the next 3 to 5 to 10 years. Your potential upside is very capped at this point, and this dude is a day trader. He is not a long-term investor. He's not somebody that should just get all of this praise from a bunch of lemmings that are probably continuing to run off a cliff, because I guarantee you a lot of people got burned listening to him. But now we're going to get to hear the other side of it, right? Now, for me personally here, guys, I own a lot of these companies, Microsoft, Apple, and I did not sell the bottoms on these, and I've been holding them through the entire market cycle. I did take a little bit of profit, you know, a month ago when Meet Kevin was getting a little get to stack some cash. We can discuss all of that, but I'm not going to sit here knowingly telling you that in the next 5 years, Apple could easily go from 2.5 trillion to doubling into $5 trillion. Highly unlikely. You know what is likely? Facebook could easily double up from here with a PE of 15. This growth beast is an insanely discounted value here. Netflix, I mean, I'm not a huge proponent of Netflix, but this is a $100 billion company with an absurd growth rate, still moving forward, guys, with a 35 PE. Yeah, the multiple's higher, but it's going to grow into that way faster than Apple's going to have that capability to do so. PayPal, another great one here, guys. Shopify, if you're on the Canadian side of the border, you want some of this e-commerce growth that's only comparable to Amazon at the exposure they have to the growth rate of e-commerce. Like, my God, guys, this isn't freaking rocket science here. And of course, I don't own all of these stocks. I have to be very strategic for what works for me. What works for me might not work for you. And I would love to load up into all of these companies, but they wouldn't make a material impact on the general portfolio. So I need to be more strategic and make larger bets. And I've gone ahead and done that with things like Alibaba. I've arguably said that Chinese stocks have sold off way greater than US companies, which means the upside potential could be far greater. And since I've kind of scaled down some of my tech to invest into companies like these, they have arguably been growing faster over the last few days by a percentage basis than the other companies I'm still holding, like Facebook. Facebook hasn't blown up as much as Baba has in the last 3 days since I bought it, and that's no guarantee to move forward, right? And foreign stocks aren't for everybody. Some people don't want the Chinese risk. So where is their value in the market? Well, aside from these kind of big tech giants, I mean, there's some other ones in here like Intel that is largely underlooked from a lot of these big YouTubers, which obviously has to go through some growing phases, but it's still growing revenue year over year with a 9 PE, a 3% dividend yield, guys. The valuation here is just absolutely nuts. And let's talk about some smaller cap companies, because I like Jeremy's style of investing. You know, he's long term. I really don't like the crazy amount of exposure to small caps he has, but there is some crazy discounted deals here. Let's talk about the ARK ETF, because Kathy, luckily, if you read into the stories, investors pour into Kathy Wood's ARK despite losses. Why has ARK dropped over 30% this year? Where is it headed? Well, a lot of people are obviously giving Kathy Wood some credit here because they think they're going to rebound off these bottoms, right? But where I like looking at her stocks is where I think the best value is, because obviously not in Tesla. But when I scroll through this, let's talk about some of these like Coinbase. Now, look, if you're not into crypto, you want some more risk, you don't have to buy Bitcoin. I wouldn't even get into altcoins personally, but if I was going to buy something, this is a great place to start. I mean, Coinbase is trading down massively with a PE of 12. This company has a PE of 12, more free cash flow than the New York Stock Exchange. And from 2020 with 1.2 billion in revenue to 2021 where they did 7.8 billion. Even if this slows down, it is at a remarkably discounted price here, guys. Zoom, the pure pandemic play, one of the golden childs of the pandemic era, guys, with a PE of 26. Look at the growth rate on this sucker from 2021, 2.6 billion to 4 billion dollars, almost doubling up that revenue. My goodness gracious. Yeah, we might not see the same pandemic growth, but it does not need to grow very fast from here to really justify the current value. And if you're into dividend stocks and you think you understand these businesses, because I feel like a lot of the dividend stocks come with some other risk, like Scott's Miracle-Gro, for example. This company's dealing with the MJ side of their business, which has become problematic. On top of that, guys, there's a lot of issues with consumer discretion, consumer stapled items going up in value, trying to get the supply constraints worked out. Obviously, the packaging goods are going up in value. I mean, there's a lot of this related to inflation. And Scott's Miracle-Gro is at a PE of 17 now with a 2% dividend yield. Crazy off its highs. There could be a great discount buying here. Clorox, another one. Now, this one's PE jumped through the roof because of the pricing of goods has gone up massively, but that doesn't mean it's not oversold and could be a phenomenal buying opportunity. Kimberly-Clark, Unilever, and obviously these aren't the kind of growth rates we're going to see out of the other stocks, but these are still at crazy discounted prices, guys, and I'm hoping it bleeds over to some foundational stocks I want to use to diversify my portfolio still. Procter & Gamble isn't down as much as I'd like it to be. McDonald's not as down as much as I'd like it to be, so I just want to get through Q1 earnings, and I hope they dip lower because I like buying these things at better valuations. But what Meet Kevin really should be preaching is what his friends preach. Learn your risk tolerance. Understand your own circumstance. What is your income? How much are you putting into your portfolio? How old are you? What is your time horizon here, guys? That all dictates what kind of stocks you should be buying. I'm in my 20s, so I like buying individual companies over index funds. But as I get older, I see the value and the understanding of just buying index funds. What Meet Kevin is preaching here is his own circumstantial situation with companies that he's interested in. Because if the guy was a true genius, he would have sold the tops on the market, went purely into commodities, and basically bought Canadian stocks. The dude would be doing 1,000 times better than he is right now, but there's like 10 other strategies I could write out for you right now over the last 3 months that would have outperformed Meet Kevin just selling short the market and then thinking he's buying the dip when we don't even know if this is truly the finalized dip. I mean, there's just so much uncertainty into the future, guys. I don't know. I don't get it, but I honestly, guys, like I said, I had so much respect for him going into the bottom of the market and his strategy, but now that he's just kind of like got all his backup from these people that battered him that have now flip-flopped themselves, it's all just so moronic to me, guys. It's just so moronic. I don't think I've ever seen such stupid shit in the market. And to offer praise to that, this is the exact opposite of everything I grew up learning from Warren Buffett, Charlie Munger, Ray Dalio, Kevin O'Leary. Like anybody with 2 cents and $1 billion in their account does not speak like Meet Kevin. Now, for that reason, he is entertaining 100%. I would love to see how this moves forward for him. But at the same time, guys, from anybody in that comment section, please, 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 I hope to God that is not your end-all be-all financial advice. So stay cool, stay awesome, and as always, I look forward to catching you in the next one.